consideration, so it's a good thing to wait if you're unsure.
In terms of immediate current considerations, you have a maturing policy. So have you decided what you're going to do? What type of policy is it and what are you going to do with it?
It's a with-profits endowment, and that will come out to coincide with my 50th birthday. I'm still deciding what to do with the proceeds. I have lots of plans, some of which my mother disapproves of, and the rest of which Paul disapproves of, so somewhere along the line I'm going to have to come up with a good solution. And the most pressing consideration now is to think what I'm going to do to replace that one with something different.
So the sounds of there's a bone of contention between you there, but what do you think Janet should do when this policy matures?
Well, when the policy matures, Janet should look at obviously investing it in a wise and safety conscious way. She has some different ideas of what she actually wants to do with the money.
She wants to blow it all the way in her 50th
on a party.
birthday, yeah.
Right.
Carry on. So what else should she do?
Yeah, we're looking at the moment into an investment vehicle for Janet to replace the existing policy that's maturing on an ongoing monthly basis. We've been through the different types of savings vehicles that Janet can be considering. She doesn't really need to retain access to the money, so we're looking at something over a 10-year period.
And what type of funds were you thinking about?
Well, we're keeping the green note. Janet likes the idea of being socially responsible. We've looked into the Friends Provident Versatile Investment Plan, and Janet likes the idea of splitting the monies between their environmental fund, which is stewardship, and a European fund.
It sounds great. And you can still have a little bit left for your party.
Yes.
I'll be expecting an invitation, by the way.
Get one.
But we've got to think about pension then. Now, do you have pension provision already? What do you want to do?
Yes, I do. I mean, I've been regularly saving into my own pension scheme, and with various employers they've contributed, and I took advantage of SERPs in 1900 and frozen to death, and got the maximum amount of extra that they gave you at the time. So that was one really shrewd move that I made once in my life. But I feel I was a bit unsure that I needed to top up, and my friend here thinks that I'm right, and it's just a question of how much he can squeeze out of me to put into it.
How much are you going to squeeze out of Janet then? And is it a good idea to top up her existing pension?
Pension's very important. Janet needs to contribute an amount that she feels comfortable with and can manage obviously on a monthly basis, not to go over the top with the contributions, but to feel very comfortable. And the pension scheme does need topping up. Janet and I have spoken about what she's expecting from the pension, and to achieve what she requires, more money needs to be invested in the funds.
Do you ever see yourself retiring? What's the ideal? When would you like to retire and what would you like to live off on a monthly basis?
In about an hour, and as much as possible. I think, like most people, you know, none of us know what's around the corner health-wise. So the sooner I could retire on a good pension. And as I said, you know, at the very beginning, I don't want diamonds and, you know, a luxurious way of life. I do actually, but realistically, I just want enough to do what I want to do, and not to have to worry about whether I'm going to be able to pay the electricity bill and all that sort of thing. Anything on top of that would be a bonus. And because I started so late, you know, I've got to shove in as much as I can, as quickly as I can, really.
Well, let's have a reality sound check from Paul. What funds do you think Janet should direct her new contributions into?
Well, I can't promise Janet diamonds, but...
No, you never have.
Well, we've been looking at a couple of health funds that specialise within that market. And also, Janet likes the idea of being flighty. And we've been looking at Japan as well. The value of Japanese investments are particularly low at the minute and may continue to go down. But obviously, when you're contributing on a monthly basis, you gain by pound cost averaging, i.e. you're buying more for your money while the price is low.
Yeah, well, that sounds right. I mean, Paul gave his disclaimer there, you know, things can go up as well as down.
Right.
But let's have a look at you now. Objectives achieved. Investments, did you want to keep them low risk or high risk? Have you changed your mind?
No, I'm very happy with what we've done, and I think there's been a good spread between the various...
What's the risk strategies?
Yes. Enough to keep the dashing side of me happy, and enough to keep the conservative side of him passive.
Well, so Paul, what do you think about ISA? Is that would you term that low, medium or high risk that Janet's gone for?
The ISA Janet actually invested in is medium risk. ISAs can range from anything from medium to very high. I think that by her topping up the existing with profit bond that caters for the low risk side of things, the ISA certainly has fulfilled the medium risk. And maybe with the pension top up, we can actually then fulfil the flighty high risk side of Janet's personality.
That's super. And what a personality you've been. It's very, very brave of you to come on, you know, and to reveal all, as it were, financially. And
Completely my pleasure.
I hope you have a wonderful business relationship, and who knows, we might do a documentary on you in about 10 years' time and find out how that birthday party went. Thanks very much.
Thank you.
Hello there and welcome to Money Matters, the personal finance show packed full of hints and tips on making the most of your cash. We cover all aspects of the money world, as you know, and today the spotlight's on family finance. Coming up, retiring is one of life's major events and it pays to be prepared. Many companies send members of staff who are about to retire on pre-retirement advice courses to ensure a smooth transition. Well, Money Matters reporter Anthony Rubin may look too young for early retirement, but we sent him on a course anyway, and he discovered it's not just financial matters you need to be thinking about. His report coming up in just a moment. Paul Banfield, Senior Financial Consultant at Best Advice Financial Planning, is here to give his view on pre-retirement courses, and he'll be giving us some handy tips on retirement finances. The government's new stakeholder pension is up and running finally. It's been hailed as a low-cost, flexible product available to all, but not everybody's happy. Dr. Una MacDonald, Director of the Retirement Income Reform Campaign, believes the stakeholder is a bad deal for women, and she's here to tell us why. And he's back, poised at the pod, ready and waiting to whiz us around some websites. Yes, I'm referring, of course, to the undisputed master of the mouse, Alan Stephens, Head of Digital Services at Which Online. First, though, let's take a quick look at some of the top stories that affects your family finances.
Angry pension holders from Equitable Life may be given official representation on the board of the company. The chairman, Fanny Treves, has said he will allow one or two ordinary members of the company to be nominated to the board. It's all part of the Equitable scheme to fund its guaranteed pensions without going under. This week sees the introduction of new pension rates announced in the recent budget. Single pensioners can now claim £72.50 per week and couples get £115.90 a week. But the charity Age Concern says more than 1 million pensioners are losing out because they aren't claiming all the benefits that are available to them. And a blow for men's equality is about to be struck. From tomorrow, widowers with children will receive the same benefits as their female counterparts. The new widowed parents' allowance of up to £82 a month gives Britain's 20,000 bereaved fathers the same rights as mothers for the first time. And finally, almost half of us aren't contributing to a personal pension. A survey commissioned by the Post Office found that almost 2/3 of people think the state pension should be large enough to provide for their retirement.
Louise Peterkin reporting. The transition from full-time work to retirement can be a very difficult one. There are all sorts of things to consider, from whether to take a lump sum from your pension to how you're going to manage to spend so much time with your spouse. Some companies send employees on pre-retirement courses to help make the transition as smooth as possible. Well, Money Matters reporter Anthony Rubin became the youngest person ever to attend such a course, and he sent us this report.
Many companies send staff who might be considering retiring on retirement advice courses. I'm at one such course at a London hotel, but it's not all about financial matters. Elaine Byrne gives the part of the course dealing with the dramatic lifestyle changes that follow retirement.
I think people often give more thought to where they're going on holiday, or what new washing machine they're going to buy, or new car. I think they give more thought to that than often they do to the next 30 years, what they're going to do with it, where they're going to go, who they're going to spend it with, how much time they're going to spend with their partner. Are they going to do other work? What about voluntary work, interests, hobbies? A lot of people, when it boils down to it, only have their work in their life. It's been the be-all and end-all. And take that away from them, and it's sometimes you could call it a bereavement.
It sounds like a difficult transition to deal with. So what is it that worries the people taking the course?
What to do with my pension, what to invest my money in, where to go, how to do it, who to talk to. It's just a minefield.
The thing that I probably am not looking forward to is being at home with my wife. And now that probably sounds very bad, but then for 30 or 40 years, we've been apart and we've lived apart. And yes, you see each other in evenings and mornings and weekends, but that's different to being there all the time.
So what worries you most about retiring?
Well, I suppose the lack of a disciplined life, but I don't know. I'd be looking forward to complete relaxation and freedom. I'm not really worried.
Philip Rose has been running pre-retirement courses like this for 15 years, and a lot has changed in that time.
I think 15 years ago, the public were largely unaware of personal finance and the investment market. The change over the last 5 or 6 years has been really striking. You've just got to look at the media and see how much coverage is given to personal finance over a few years ago. And people's knowledge and awareness really has grown, which I think is a tremendous move.
The people taking the courses may be more financially aware, but there are still common mistakes made.
I think probably one of the largest mistakes is, and we preach this at the seminar, but putting all their eggs in one basket. That they tend to put the majority of their capital in building society accounts, bank accounts, where really they're not doing the best for themselves by doing that, and they're not generating and taking care of income for the future. And I think that tends to be one of the major areas that the pitfalls arise. Another one, of course, is not making a will.
I think it's that they decide that although they realise there's a long-term challenge, they're not going to face up to that yet. They'll make a short-term decision. So we'll put the money on deposit or into short-term investments just for the next 6 months whilst we make our mind up. And they never get beyond that point. And they end up that their long-term strategy is a series of short-term steps, and they miss out considerably.
People retiring earlier and living longer means what you do as soon as you retire is pretty much as important as how you prepared for retirement in the first place. So it's probably worth getting some decent advice.
The ever-young Anthony Rubin reporting there. With me now to focus more on the financial side of pre-retirement planning is Paul Banfield, Independent Financial Advisor at Best Advice Financial Planning. Paul, thanks very much for coming in. Do you think retirement courses are useful?
I do. Any information obviously is good to obtain. I would say that knowledge is power. The other side to the coin, of course, is that a little knowledge can be dangerous. What people who attend courses similar to this should do is bring the information away and obviously seek professional advice.
Of course, the most important thing that people need to consider in the run-up to retirement, obviously, is pension provision. What about those people with private pensions? What do they need to be doing?
It's interesting to note that the last figures available state that £7 billion worth of pension monies was drawn from private pensions without them shopping about. And of course, once an annuity rate is set and drawn, the client is actually with that rate for the rest of their life. It's very important for people to obtain their open market option and look about with regard to annuity rates. There's impaired life rates. In fact, a lot of people don't realise that they can have enhanced rates even for smoking.
What do you think stops people taking advice and going into it more fully before they actually take the pensions?
I think it's a lack of understanding. They don't know that these rates are out there, and also maybe a fear.
Now, what about those people who've got no pension provision? There are lots of those. What can they do?
Well, people that have capital behind them but haven't made pension provision, hopefully have made other provision or they're reliant on the state. They can, of course, buy annuities direct. They can invest in bonds to increase their income. There are many things they can do, but obviously you need the capital behind you to be able to do that.
Well, on the question of capital, we know, don't we, there are lots of people approaching retirement who've got, substantial sums in the form of savings tied up in bank accounts. Is that necessarily the best place for it to be?
Yes and no. Obviously, bank and building society accounts are very important. We all need to have access to our money. The trouble is that a lot of people tend to put their monies in banks and building societies and say that they'll deal with it at a later date, and that later date never comes. Obviously, the rates are very low, and people should take advice with regard to shopping around.
Now, what about tax and retirement? Because it's a very important issue, isn't it? And I mean, personal allowances change once you reach retirement age. How do they change? What's available?
Well, they increase at age 65 by over £1,400, the age allowance, and again at 75 by £280. That's the amount that they can earn without paying tax. So it's very important that people are aware of these tax changes, and in fact every matter leading up to retirement.
Okay, forecasts from the Department of Social Security, what are they and why do they matter?
We can all obtain forecasts from the DSS with regard to benefits in SERPs and the old graduated pension, and indeed have an accurate forecast on our state retirement pension. People wouldn't turn up for work one day starting a new job only to say how much am I being paid. The same situation arises on retirement. Why leave it until a few weeks before to find out what your pension provision is?
Now, what about long-term care? Because you know, a lot of people haven't made any provision for the long-term care, and then find out to their cost that it's going to cost them a lot of money.
Absolutely. People should definitely be looking at long-term care. Very, very important. Has a tremendous effect on the estate. It isn't as complicated as people may think, and again, I'm sure there's a fear there. But by looking into a long-term care bond, they can actually have the interest from the bond, or some of it, to actually pay a protection policy in the event of should they need to go into a nursing home in the future. And it does actually protect the estate.
So is that effectively an insurance policy then? So it prevents your estate being eaten into?
Yeah, it pays the monies direct to the home involved, tax-free, should you need to go into a home. But if you invest your money in a bond and use the income from the bond to fund the protection policy, you're not actually outlaying any capital for that protection.
Okay, and final brief point, wills. Important, isn't it, for people to update their wills, but surprising how many people don't.
It's surprising how many people do not have a will, but also how many people leave and don't update. As you go through life stages, we do need to be looking at updating wills, keeping them abreast with the changes that we've encountered through the life.
And the worst thing you can do is to die intestate.
Absolutely.
Right, Paul, thank you very much for coming in.
Sure.
Want to cut the cost of your mortgage, live comfortably in your old age, or make sure your family is looked after if the unthinkable should happen? The cost of everyday life can be frightening. £250,000 to bring up a child, and each year we waste billions of pounds paying too much tax. Trustworthy financial advice needn't be expensive. In fact, it can save you money. Expert advice could leave you paying less for your mortgage each month and make savings and investments work harder for you. An independent financial advisor who is a member of DBS can help plan your finances to make the most of them today and in the future. They're backed by DBS, the biggest and longest established network of independent financial advisors. With DBS, financial advisors are independent because they're not tied to any particular products or companies. An independent financial advisor who is a member of DBS will give impartial advice you can rely on, help you realize your dreams, ensure you're financially secure in the event of illness, disability or death, plan for retirement or school fees and university education. To take the first step to getting financial advice you can trust, all you need to do is dial this number. DBS will have an advisor in your area contact you. You can arrange your first exploratory meeting with no obligation and no cost. DBS Financial Management PLC is regulated by the Personal Investment Authority for investment business only. Answers given in this programme are for general guidance only, and specific advice should be sought before taking any action.
You're watching Simply Money, brought to you with DBS, the country's biggest network of independent financial advisors. We're taking a look at why everybody should be considering what it's going to take to keep them in the style to which they would like to become accustomed when they retire. And with me is Paul Banfield, a financial advisor from the DBS network. Let's just take another look at the basic state pension, which is £72.50 a week for an individual and £115.90 for a couple. Could you live on that? Paul, could you live on that?
No, even though obviously my main outgoings would have ceased, say the mortgage. Obviously no one can survive on that.
It really is very low. I mean, one wouldn't be able to afford the little luxuries, would one?
Exactly, because we still have cars to run, holidays to go on. Life doesn't stop when you retire, so we do need to plan.
So in order to provide a reasonable standard of living into old age, how much should I be paying into my pension scheme?
That's all obviously down to an individual's circumstances, what they can afford to put away for retirement, and that's why it's very important to have an overall financial health check.
So would you have that every year, every couple of years? How would that work?
On a yearly basis, the product providers always send out statements to make you aware of fund values. That's always a good time to have a review.
So if it's not doing terribly well, you step it up, and if it's doing terribly well, you might have a little holiday?
Could do.
Now, Terry from Sheffield emailed us to ask us, he said, I'm almost 50. Is it too late for me to start a pension?
It's never too late. This is a problem. A lot of people think that if they've left it to their 50s, they can't build up enough in the fund for retirement, but in fact they can.
But does it mean they have to pay enormous contributions?
It means they need to contribute more than if they'd started in their 20s, but it still isn't too late.
And presumably someone like you could explain to them how it could best be done?
Absolutely. We'd look at all the options, all the product providers, and we'd make an informed choice on their behalf.
And finally, even if you already have a pension, is it worth checking to see how well or otherwise it's performing?
It is. Unfortunately, most people tend to affect a pension and forget about it. It's very important to review it on an ongoing basis to make sure that it's performing well, the contributions are about right for your budget.
Now, when I review a pension, my eyes glaze over because there are rows and rows of figures. Again, is that something that I should bring to you?
We would make it easy for you to understand so that you can then make an informed choice about the future for your pension.
Paul, thank you so much for all your advice, and thanks very much indeed for joining us on the programme.
We'd love to hear from you on 08703 66 22 66.
Hang on, is that Concorde again?
Probably.
Can you hear that at home? Every night at this time there's this...
That dull rumble
it's Concorde.
is Concorde.
Go away.
Maybe
Take another
you could
route.
buy a seat on Concorde if you should want
You
one.
can't hear it.
So
Oh,
£8 grand won last night in You Say We Pay. You could be tonight's lucky winner. The qualifying question in just a couple of minutes.
OK, but before we go on, no need to wade through acres and acres and acres of budget coverage later to find the bits that affect you. It's all over now, and we've got pretty much everything you'll need to know in a handy bite-sized chunk from finance expert Paul Banfield, who's live on the banks of the Thames, opposite the Palace of Westminster. Hi, Paul. Just the killer question to kick off for people just coming in from work and from school, I guess. The big kite that was being flown yesterday was that the Chancellor wasn't going to put up income tax, but in a sneaky little side shimmy, he was going to stick a couple of points on VAT. Is that what he's done?
He hasn't actually. I think that was a red herring to prepare us, and then we can be pleasantly surprised. The Chancellor actually has increased national insurance by 1% across the board and has pledged that all of the money raised from that increase